Today's guests on the Bitcoin.com news podcast are B2 Broker CEO Arthur Azizov and the group CDO John Murillo. Welcome to the show, guys.
Good morning.
Hi, good morning.
So, guys, we're here today to talk about the difference between brokerage and a crypto exchange. Can you start off by, first of all, introducing your company, and what makes you an expert in this field?
Yes, thank you for the question. My name is Arthur Azizov, and I'm CEO and founder of B2 Broker Group of Companies. We have three main pillars. The first one, it's technology. We have been developing different solutions for forex brokers, and starting from 2017, we shifted the company, not entirely. We still focus on the FX industry as well. But besides, we started developing crypto solutions and the fintech solutions for the crypto industry as well. The solutions such as CRM, the payment system, the crypto processing system, the market making, trading platform, copy trading, and so on. So it's, the full suite in order to run your own operations, to launch your brokerages or exchanges. And we have been working on the market since 2017. On the crypto industry, and for Forex, we have been working since 2014. So it's already 10 years. We have a bit of expertise. So John, maybe you introduce yourself.
I'm John Murillo, Chief Dealing Officer. Basically, everything trading related, trading conditions, liquidity management, etc., runs through our desk. So we are here to discuss a series of interesting topics in this field. I've been in the industry for about 24 years right now, and I believe we have added value through our proposition that we've been building on for the last 10 years.
So definitely very experienced guys. So let's get started. How do you see the difference between a brokerage and an exchange?
It's a good question. I think there is a bit of mixed up of the definitions. And, when we have started developing the software, I remember that everyone was calling any platform because of Binance as an exchange. But in reality, when we saw the rise of the crypto industry, it was end of 2016, beginning of 2017. So I remember that day actually. It was November 2016 when Bitcoin hit around $650 or $800. And then on the 1st of April of 2017, when the Japan, they announced that they're gonna accept or recognize Bitcoin as a legal tender. You remember, at that day, Bitcoin hit first time 1,000 USD. So I remember I was in Cyprus that day, and that's when we started buying BTC. And I remember that day because of the absence of a lot of exchanges and the solutions how to buy. Mostly of them, it was just, OTC, local OTC desk, the guys who were offering the Bitcoin. And that's how we entered this market. And we realized that some of the companies in reality, they were developing brokerage platforms, but they were presenting to the users this platform as an exchange. And some of the platforms with the matching engine, they were really trying to do the exchange, and the definition of the exchange, it means that there should be matching engine, there should be maker and taker, and this exchange, in particular, it's a trading venue. So basically, the liquidity creates there. So, John, maybe you can elaborate mostly on the liquidity construction. What is the difference between the brokerage and exchange in that regard?
Yeah, so add on what Arthur has said. Basically, it comes down to an exchange operating on what we know as a matching engine. These are a set of limit orders in the marketplace that once it's matched, then the order gets executed, whereby Traditionally, in the brokerage space, an order will be executed with the relevant execution venue, whether it's ECN or you're diverting that transaction to your LP. It will be confirmed a price, and then the end user will receive the ultimate price. So this is where this distinction has to be made. We always have come across historically through customers who have kind of not been very clear on this particular difference. So it's just two different methodologies on how orders will be managed. And obviously the exchange part of the business is, as it says, is you're doing an exchange of one asset against the other. Something to elaborate further on, but this is the essence of this concept.
Got it. So what can brokerages offer that exchanges can't to the end user and to the entrepreneur that's opening the brokerage or exchange that considering, what model to go?
It's a very good question. One of the important components, and I would even call it crucial component of the boss brokerage and exchange, it's a liquidity. And I think we should clarify further how it's being constructed on the brokerage side and on the exchange side. Let's begin from exchange again. First of all, as I already mentioned, on the exchange, there are two types of players, let's say, or participants. It's makers. You know them, they known as market makers, and takers. Takers can be any user. Even the market makers, they can also be takers. That's actually what they're doing most of the time. And basically, their job is to keep the orders in the order. That's how they construct liquidity. But one of the biggest obstacles, especially for the new exchange, for the young exchange, is to find reliable market maker. Because what I can see, there are three types of market makers out there. The first one, it's a large established corporations with the balance sheet, with the technology, the back, with the experienced team, with the operational team, with the proper risk management approach, with the license, with the regulation, so it's a proper market maker. And, we know very good names. I don't think that we need to mention them, but still, this is the first category. But the problem is that they are not willing to work with the exchange where the volume is pretty low, or where is the client base is just, maybe a few thousand traders or even less. Because for them, they need to put a lot of effort and spend a lot of resources in order to get connected to your exchange, to make integration, to put their tech on your exchange, and so on, so on. But what actually the advantage for you that when you give them credit, you can be 100% sure that when the clients will make money and market makers lose money, this market maker will pay back. And there is second category of the market makers. It's, on the every expo, you see these guys, they are going around every booth and they are saying that they are the largest market maker on the Binance. I'm pretty sure, guys, you met such people. And what they do, they come to you and they say, hey, look, Joel, I will be your market maker. Give me credit, $1 million, and I will do market making for you. And, when clients will make money, or for instance, when the clients lose money and market maker will make money, you will need to make a profit sharing with me, right? You need to pay to me back. But now when it's an opposite situation, such market makers can be gone. And how are you going to chase them to find them, to pay you back? Of course, and there is third type of market makers. It's just normal kind of users. And what they do, some kind of arbitrage. They place their own deposit on your exchange, and maybe you give them extended limits for the API calls. Maybe you give them better commissions. Maybe you share with them, for instance, you take from taker, I don't know, 0.1%, and then you share 0.05 with the maker. So that's the third type of the normal market makers, companies or firms, but usually it's just small teams, and they try to do the arbitrage across exchanges. So maybe, John, you have to elaborate on this.
Yeah, to add on, Arthur, what you're saying, it's very interesting because what I see now after last year's events with FTX, the market has become so much more mature and a lot more critical on that counterparty relationship like never before. This was not a component in anyone's risk model until now, given the circumstances of last year. So I think the maturity of the industry in this regard has become probably the highest we've seen ever since. And this is a positive development for all of us in business.
Yes, and unlike the exchange, on the brokerage side, broker can be connected to several liquidity providers. Of course, on the exchange, you can also invite several market makers and let them compete among themselves, between themselves. On the brokerage side, the good thing about this, that first of all, I think, John, we need to also define, before we jump to the topic about the brokerage advantages on the crypto market, I think we should define what does mean pre-execution and post-execution. So maybe you would like to elaborate on this.
So this is a key part of that execution experience for the brokerage world. When an order gets sent out to the market and it does a pre-check, then it goes and gets filled by that particular LP. And, when we speak about LPs in the brokerage space, we're normally looking at prime of prime models. Okay. These are the type of relationships you want to be looking for because they will pre-execute your order, which means the risk mitigation is already offset. And therefore, the execution and experience for the client on a large market impact will be minimized on a large order. So it is important to remember that if you're doing pre-execution, you will get the real market price of that order at any given moment throughout a trading session. Now, when you're dealing with operations that are on a post-execution basis, this tends to be a little bit more complex, and you must be on the lookout for that business model that you're engaging with. Because when you deal with the post-execution, it means that a price was confirmed, and then now that order sits on someone's balance sheet, and it has to be managed. So there is the market risk component and balance sheet element that has to be assessed, which is why I always, throughout my career, I've been extremely focused on counterparty risks, not just market risks. So you have to take these elements in order to understand the business in which you're in. And the deeper you dig in, the more answers you get to this topic.
And what I like about brokerage, you actually do not depend on market makers. So basically, you can construct liquidity from different sources, and you can create different liquidity pools for different type of users. For instance, you got professional guys, they trade HFT, they do arbitrage. So what you can do, you can put them on your aggregated feed. And aggregated feed, basically, sometimes you even can see inverted spreads. Of course, most of the brokers, they try to keep this inverted spreads as their own profit, but sometimes if it's real professional users and they do pretty sufficient volume, they generate pretty sufficient volume, why not? The broker can put them on the dedicated aggregated feed. Then you can also create different liquidity pools. So basically, you can take different liquidity providers, or even you can connect different exchanges and create liquidity pools based on their market, based on the assets, even you can, aggregate the illiquid tokens from different sources and make them kind of liquid eventually, And when we are talking about super liquid pairs like Bitcoin dollar, for instance, of course, what you can do as a broker, you can make the market depths much deeper, which will be more efficient for the traders who are doing the large clip trade. And this is super key element. John, maybe you would like to elaborate on this, on the advantages of the brokerage.
Basically, by aggregating liquidity, as you said, Arthur, is in this instance, by combining multiple different venues in one place through a reliable tech stack, through a connectivity point, that this is very important as well, that can have the capability in no latency, or at least the minimum amount of it, you have the ability to have a large order being executed with the least amount of market impact, which means your trading strategy, it is already a lot more profitable because you're going to get that liquidity consumption element out of it.
Oh, sorry, John, for interrupting, but what John is saying is crucial, because how many times you come on the exchange and you see the very tight spread, very tight. But as soon as you try just to execute, just let's say 5 BTC, what is happening, Joe?
You get a price action. There's a market impact of anywhere between $10 to $20, an example, which is something that if you had a better liquidity construction, if you had more participants, that price that you're seeking to achieve, it will be more or less filled at the rate you're looking for. Whereas if you have very poor liquidity management behind that operation, then obviously the market impact will drive the price against your best interest, against the direction typically in which you're trading.
That's why on many exchanges, the traders, they try to use the limit orders, and they try to use, I think, fuel kill, right? In order to get the best price. But, on the brokerage side, the broker makes sure, and it's his best interest, to create the super deep liquidity pool to give you the best, the order book with a super tight, super tight spread. But besides, on top of that, the super deep depths of the market.
And again, that is only achievable through the correct partnerships. This is why, once again, coming back to the counterparty element of any relationship, it is crucial that you engage, that you get yourself involved with an operation that has the expertise to achieve this, like ourselves.
Yeah, for sure. A lot of risk that new entrepreneurs have to take into consideration when setting up a business like that, right? And you have to consider not just liquidity pools and being able to aggregate that flow, but also obviously the operations and the security. So definitely there's a great advantage to working with brokerage type model that I can see. So can you tell us, because of your unique position in the market, you get to see a lot of what's going on in the back that we're not seeing. Can you tell us what trends are you seeing right now in terms of brokerages? Like, what are people looking to start? What are they looking to do?
Thank you, Ari. What I see, John, maybe you see something different, but I see clearly when BTC is going up, everyone is looking for how to set up his own brokerage or exchange. When BTC is down, many companies who were going to launch their own crypto operation, they say, hey, let's postpone it, And now what we see, just 3 months ago, Bitcoin was 30, and only long-term visionaries, they were willing to establish their own brokerage or exchange. Now we see BTC 73, and just for last 2 weeks, we received, 100 requests to, the inquiries about the presentation of our technology, how to launch their crypto exchange or broker. And now our business development team, they're so busy, but the one funny thing that everyone wants to have it yesterday, you know? That's a trend I see, John. What else you see?
I mean, I was in Amsterdam last year at one of the conferences, and what I said back then is, I received a very similar question to yours, and I remember very well. My answer was the market participants in this space will be driven by price action. We are back to this all-time highs. People get excited. People see now the opportunity, and then the fear of missing out is back. That's it. So a lot of entrepreneurs, from a trending standpoint, they see the opportunity. Obviously, they want to get in yesterday, but it's a process that takes a bit of time. The growth for having your own tech it's there. I think everyone is seeking to differentiate themselves from the other exchange that is already in business, because you've got to get creative. And I think one of the trends that I see from clients coming on board is how different it was, Arthur, just 7 years ago when people were launching their exchanges. And now there's educational material. Now there's I call it very, very good customer service in place compared to years ago when you could not even get a hold of someone on any exchange for 2-3 days or even a week. So trends are more client-centric, I would say, and this is a positive for the communities out there.
Definitely. What also I would like to add on top of that, what I see as a trend, of course, it's a regulation, first of all. It's a huge trend, and we see that regulation is coming in force almost everywhere. In Europe, actually, the first June is going to be pivot point, and June of 2025, the entire crypto legislation will be enforced, and everyone will have to comply with it, which will require a lot of adoption. But this regulation actually, for the small companies is kind of, I wouldn't call it, I don't know, complexity or threat, but definitely it will challenge the small companies because, in order to comply with, for instance, dollar requirements in Europe, have you read this document? It's 200 pages only of the requirements. And in order to comply with this, you need to put your entire dev team, like 40 people, for 1 year just to try to develop all these kind of reports and so on. But again, it's also a new opportunity for the other tech companies who would like to enter this area. They can, develop such things and provide to the customer, to the exchanges, brokerages, whatever. Then what I see, the second trend, that banks are getting into crypto. And this actually is going to be crucial point. Why? Because, the many companies I know, they were going around all the expos and they were, screaming, hey, decentralization, freedom, blah, blah, blah. We don't care about banks. These word banks, you know what I mean? And now what we see, you think the banks do not have resources to enter crypto market? Come on. They can enter tomorrow. They can allocate $1 billion today in order to enter tomorrow. And then what's going to happen to all these small startups, to all these small exchanges?
Just 2 weeks ago, remember, we had a very interesting meeting here in Dubai, and one of the largest banks in the world, it's heavily investing in crypto projects.
Yep.
Not only that, but their own technology. So
they actually already launched custody.
They launched custody. There's a lot of development from the institutional world coming in. And the most important development of all, I think the approval of those ETFs back in December by the Securities and Exchange Commission is a game changer. It brings a all new way of perception on crypto for everyone now on the world scale.
So those are very interesting trends, with regulation pushing people. I'm guessing they're going to have to get a whole stack of technology that's, regulated by the by the provider, not by the end client, right? Because they wouldn't be able to like develop their own tech, that matches the regulation in time, right? But putting 40 people just working just on that, right? And in the same time, with banks coming in, right? Do you think we're gonna see them just working as custody, just working with like offering banking services to big holders, or do you think they're gonna start offering retail trading as banks?
May I, John? Look, my bet is 90% that they're gonna start offering crypto trading. That's actually what Revolut already has started doing, right? So they started offering crypto trading. I remember that initially they launched for everyone. Then they closed in UK for the retail clients because FCA they issued the new regulations that you cannot offer this service to the retail clients. And now they switch to the professional clients in UK. But within the Europe, I think they keep offering this. This is one of the examples, right? Then what we can see, the banks, they invest actually into their regulated exchanges. You can see Kraken, Bitstamp, Coinbase, who are investors behind them. It's all big names. I remember even the JP Morgan when they were saying that, they are kind of against crypto. It was like several years ago, like I think it was 3-4 years ago. But at the same time, they were already started investing into the crypto project. So that's why I'm pretty sure that banks, what they constrain the banks from the entering the market, it's only regulation. They have people, they have technologies, they have experience, they have knowledge, they have teams, they have operations, they have compliance, they have risk manager, dealing, liquidity, everything they have. What only it's the one piece is missing, it's regulation. That's it. So my 90% bet that June 2025, we will see a few banks will announce about the crypto trading. For their, can you imagine every bank already has like millions or 100 million users or 10 million in each country?
Yeah, that's definitely going to do a lot of impact for, people that are still on the sidelines and, waiting for that sign of legitimacy from the traditional market.
Just to bring into perspective, not long ago, now in December or early January, some of those ETFs that were launched received the largest inflows of capital in history. This is already a sign that there's a lot of people around the world already invested. They're just doing it through a more regulated framework, which is what I think the crypto industry is going to get a boost from, because it brings that level of credibility to some degree, we could say. And that is where the masses of people will be joining. And it's a gradual, I see it as a gradual process where everyone is moving into crypto. And we're moving into the digital world. That's it. And I think it's a transition period in which we're in. The landscape within a year will be very different than it is today. And I think you see firms like eToro, Revolut, just to mention a few, that are doing very well in this space for that particular reason. Plus, it attracts a whole new target audience of investors or traders, however you wish to look at it. And that brings a different demographic, a different, it's a lot more accessible. And that's what it comes down to. That's what crypto does. It opens the doors for anyone, anywhere in the world to have access.
Definitely. So assuming we're going to see the big giants starting to enter the market, how can existing brokerages and exchanges, do engagement and keep their clients? Like, what should they focus on? What offering do they currently have? I'm thinking like everything from educational materials to competitions and working with introducing brokers, right? You guys are the expert on that.
What I see, one of the interesting facts that if we take a look on the Forex market, what is the trends in terms of clients acquisitions there? Prop trading, or someone is calling this challenges. Basically, the idea is user or trader, he pays, I don't know, $100 or $80 or $120 every prop turn, they set their own pricing. So, and what this user is paying for is to get the access into this challenge. And usually challenge divides by 2-3 different stages. And every challenge has its own risk parameters. Let's say you can't go more than drawdown, I don't know, 5%. You have to make at least 10 trades. It shouldn't be only one pair, so everyone is doing different things, but the concept is to set this challenge and you divide this challenge by several stages and to assign for those stages specific parameters. And if you go through first, second, or third stage, first of all, you get your money back because you passed the challenge. And secondly, the company giving to you the funds that you can trade. And usually the allocation of the profit sharing is like 60-70% goes to the trader and 40-30% goes to the prop company. So, and now this is one of the trends how to attract users. And this is super, super popular on the Forex industry. And what I see is that some of the Forex guys, they moved to the crypto space and they started doing similar things. This is the first point. Second point, as you mentioned, Avi, introducing brokers. It was always one of the key tool, I would say the marketing tool, because what I like about introducing brokers that, for instance, if you go to Google and you spend $100,000 on the advertisement, so your ads can be clicked for a day, and how many leads potentially you can get? How many of them will be registered? How many of them will pass QIC? How many of them will initially place a deposit or first time deposit? How many of them eventually will get into trading? So it's a big question mark, right? It's the funnel is very teeny. So, but if you go to IB side, introducing brokers, basically you pay for the real performance. When they deliver to your client, when the client is doing trading, that's where you share the spread or percentage of commission, whatever, every broker has its own kind of type of setup. And the third point, what I see is very important, it's a copy trading. And on the Forex industry, copy trading is super popular. And there are different models like copy trading, social trading, PAM, MEM, contest. It's a different things, but all of them, everyone has its own kind of business models, but essentially, in general, it's a copy trading. And what we see since Binance has launched also the copy trading, now many exchanges, they also want to do so. And even that's why we released our second version of the copy trading that will be connected now with our B2 Trader platform for the crypto spot brokerages, where you can do this copy trading solution. It's to me, it's one of the key points. So what do you think, John?
Yeah, I think that definitely those points, Arthur, you mentioned are definitely some of the most common practices. But a lot also, I would say, a lot has to do with an exchange at an early stage is how creative you can be. Also, remember your marketing campaigns, your website, that is your image to the world. You have to have something constantly evolving within your operation, because now the competition is just getting stiffer. More people are coming to the space, more business models, and more ideas on how to attract business. Definitely those mentioned already are the longest working tools in one industry that is transferring to crypto space. But creativity remains the key because you got to always come up with new ideas, new themes. We see a lot of sponsorships by some of the biggest exchanges in the world. I mean, just naming, for example, Formula One has some of the biggest exchanges, right? And that is a $2 billion user audience. That's a very significant way to enter a very large crowd. So you have that brand awareness from the highly capitalized exchanges. If you're starting this space, unlikely that you will make an investment of that size. Therefore, you got to get creative. And this is, to me, the key. A great marketing team who has constant development of different themes for your end users. It has to be attractive. It's not enough to have material that is educational because anyone can publish that, but it's something to attract that end user. You have to have a way in that client journey that attracts that person to come into your exchange. And it's not only about commissions and trading conditions. A lot has to do with your brand positioning. So again, marketing is a key component, in my opinion.
Definitely. I'm also thinking about focusing on geographical positions that are not necessarily covered by everyone. I think, especially if you're working with IBs, right? There's people that are specialized, in markets in like Asia or other places where traditionally, you wouldn't get to, people actually putting money in through a Google ad, like you said. Yeah.
Definitely, we can't be agree more. So it's definitely because the local markets is something that it's really hard accessible because of the localization, because of the language barrier, because of the the local regulation, and so on and so on. So that's why we see stock exchanges, they're doing pretty good. And even though they're pretty small, but they're doing very good. Why? Because they focus on a super, super local market. Nobody speaks their language, and people, they don't want to, because, even though they know that there are large exchanges and they have usually customer support, they support on different languages, but still, if you know that you have a company right here, um, they have the local license, they have the local people, your friends are working there. So that's why perhaps you go there. It's human nature. Human nature. We will always feel more comfortable with a local operator of some type. And so if that exchange has a localized approach, it definitely gets a lot more engagement towards the business.
For sure. Okay, guys. So I want you to basic and tell me right now, for people that are just starting out and they're thinking, they want to set up their own business, what are the 3 ways to set up your own broker or exchange?
Build your own tech, get a customized solution, or use a white label product. But I think we got to dive very deep into each and one of them, right?
Definitely. Look, build your own tech. You have 2 ways. The first one is outsourcing or outstaffing. The difference is that when you do outsourcing, you provide or you work together on the technical descriptions of the desired product. You set kind of KPI, how many users it has to be capable to keep, what type of markets you want to support, what type of assets, and so on, so on. And then these outsourcing companies, they develop this solution for you, but you don't get involved into it. It's pure outsourcing. The disadvantage here is that you don't really control. They charge you a lot. Many of them, they charge you time and materials, and you cannot really estimate and predict when this will be ready. And even though you can get some kind of estimation, you don't really know what would be the outcome, what would be the quality of that product. So this is another way of the building your tech. It's outstaffing. And outsourcing, you don't need to hire in-house your team. Basically, you based on the contractual agreement, on the specific terms, you in specific time period, you hire guys from the outsourcing companies. They come even sometimes to your premises, or of course, nowadays, most of the companies they work exclusively remotely. Still, the thing is that you control them. You can build your own business process. You can bring your Jira, you can bring your Slack, and you kind of hire guys from this company. But the difference between to hire tech team in-house against or versus the outstaffing, that as soon as the contract expires or at some point you decide that it's enough for me, you can immediately send back these guys. You don't need to worry about the compensation. You don't need to worry about how to make the contract with them, how to pay their taxes, how to, I don't know, if you need to fire someone or to hire additional resources. So everything is on the outsourcing company. That's why, because of these disadvantages of this, that still it's more costly for you comparing to the in-house, even though on the in-house side, you need to take care about the developers, about the HR, about the business process, technology, infrastructure, DevOps monitoring, coordinating, as that's, product managers, and so on, so on. You need to have a pretty sufficient tech team, to be able to develop the proper solutions. But many companies, they still prefer to have their own tech because despite the cost, still the cost will be less comparing to outsourcing and outsourcing. But what we see that in order to navigate and in order to be able to really develop good technology, you have to have experience, the deep experience, how to manage this development team. It's not actually super easy. There are specific, parameters and approaches how to do so. That's why many of the companies, they prefer to go fast and they prefer actually to buy white label. So that's one of the key points why many service providers, what they're doing, their business is to hire these developers teams, product managers, designers, front-end developers, back-end developers, architects, CTO, engineering manager, quad team, full stack engineers. Who else, John? The product managers, technical writers, all these. So you need to have a cross-functional team who will be able to deliver for you this solution. And the companies like us, what we do, for instance, in B2 Broker, we have 422 people as of now, 13th of March, 2024. So what we do, it's among them around 300 engineers, the different type of engineers. And we develop these solutions and provide them as a white label to the companies who would like to establish their own brokerage or exchanges on the crypto space, because it's much faster and much cheaper. And behind this technology, we have our own expertise. We have 24/7 technical support. We can help you to establish the proper operations. Besides of the trade tech, we can also help you with the liquidity because we are doing the prime business. I think John will elaborate on this, how it works. Then we also provide wallets. We provide mobile applications. We customize the front end for you. We provide you fixed API solutions. We provide the different frameworks, environments that you need to connect also and to integrate with the payment systems and so on. So it's in order to launch your broker, it's not only about technology. You have to have the different type of the um, things that together allow you to run your operations. So, John, please elaborate maybe on top of that, and please explain also about the prime of prime.
So historically, our business, just I don't know what you just said, right? We've been very much a turnkey solution shop whereby we build an ecosystem of multiple products and you pick and choose whatever suits your business model at any time in your cycle. So if you're starting the operation, we have a full suite of products that suit you. We can get you to market and start become profitable as soon as possible because the tools are already developed and they've been working. The expertise of the team is quite significant. This gives you an edge immediately. You don't have to wait because if you develop your own technology, it's a lengthy process. By the time you go to market, what happens to a lot of guys, we've seen this over the years. By the time they develop something, it's no longer either trendy or valid or it's outdated because whatever development they've done is no longer suitable to their business needs. So I think in today's market, at least the trend is to go for more of a white label solution in conjunction with your own tech if you're heading in that direction. Because it's not okay, you can have your own technology, but how are you going to manage that? Then you need a team, a very well specialized team. And the downside to this industry is that you have to continuously develop your products. It's not enough that you build something and here it is and it's ready for the next 50 years. No, you have to update your tech stack, your architecture, your infrastructure, etc. So this is very important. Now, when it comes to the brokerage space, I think from a liquidity standpoint, we are a wholesale liquidity provider. We're the largest crypto CFD provider in the entire industry. We're very well positioned to service spot crypto solutions. When you come to a business like ours, due to our diversification, we can facilitate multiple services. For example, in our business model, we provide a prime solution. So it's effectively aggregation of multiple LPs through our tech stack. We give you probably one of the most competitive pricing that you can get from the industry because we're the wholesale provider. Due to our large client base, we have cost of operations that are optimized, which means the cost of doing business for a business like ours is far less than anyone else out there. Now, what is really important, I always talk to this to every one of our partners. Remember, this business is not just one solution. I don't just facilitate corporate trading and I got to make the most out of it. We are extremely cost effective due to the nature of diversification in the business. Because we have different streams of revenue on different products, we don't have to be aggressive on our pricing. This is what makes us competitive, which means that most of our partners are going to be a lot more profitable than if they were operating with another vendor. I think this is one of the key points, and therefore our prime of prime offering is one of, if you think about it, just from the brokerage side of things, bringing into perspective the crypto CFD, we have some of the best trading conditions this industry has ever seen and continues to improve as time progresses. So we can be very aggressive due to the nature of volume that is processed through our systems. This is very important. And again, it comes back to that point that I was mentioning earlier. If your counterparty is a solid partner, then they can do a lot of things for you. Combine that with the tech expertise that you have in the business like ours, I think that position is in a very successful manner.
Yep. And John, on top of that, since you mentioned the development, in-house development, first of all, it's time. For instance, I can just give you some of the information about our company. For instance, we recently released the second version of B2 Trader. It's called B2 Trader Brokerage Platform. We spent on this platform around, I think, 20 months on the second version, having already expertise of the first version. The first version was built in 2018. and it had a lot of development afterwards. But still, at some point, we decided in the end of, I think, 2021, we decided that we're going to have the new platform, the new generation, completely new tech, building from scratch. And that's actually what we did. It took us around 20 months. And we spent just on this platform more than $4 million, because you need to hire the proper team. And now the cost of the operations of the tech team is going every single month higher and higher, because now it's a super competitive market, the development tech, and you need to find the really good talents. By good talents, they want to have a proper compensation. And that's why you have to be ready to spend a lot. And if you go to outsourcing or outstaffing, you can spend even more there without any kind of guarantee outcome or results. That's why, for instance, for us, we prefer to have our own team, in-house team. And actually, that was our vision from day one. We always had only in-house development. We never hired any kind of outsourcing. And because we know how to manage the technology teams and how to use the best practices, how to organize the development business process, we spend so much, but we are spending this money with our expertise. What I'm trying to say is that, for instance, if you are a newcomer to this market, and if you try to do the same what we do, you're going to spend not four, you're going to spend 6 or 7 or even $8 million. So, and this is, and the 4 million, it's not just the cap. You have to keep investing into this. Of course, you are investing from your revenue, but still, you could have just route this revenue into different things, right? But you have to keep investing into your technology in order to keep these improvements. You have to improve your technology every single month. And as more clients you have, then more requests about new features you have. And you have to allocate resources for it.
So I think it's a very challenging balance that you have to find. Clearly, at an early stage, the white label will remain the solution to go for. And then when you develop into a more mature business, and the business decision has to be made on which path is more suitable to your needs. And again, that comes to long-term vision of the business.
Indeed. So if I'm starting a new business, you guys convinced me, right, where to get my technology and liquidity. But what about the rest of the ecosystem that you need? What about legal, regulatory solutions, and obviously payment, right? That's not something that's easy to everyone to get a partnership there. How do I solve those two issues as a new entrepreneur in the market?
In terms of wallets, crypto processing, we call it blockchain wallet provider, enterprise blockchain wallet provider. So we run our crypto processing project. It's called b2binpay.com. It's regulated in Europe. We have 2 licenses there. And basically, we have 2 types of solutions for merchants and for enterprises. Enterprises, we mean exchanges, brokerages, the companies who need to provide to their users the wallet infrastructure. We need to manage all those wallets. We need to make a settlement, payouts, to generate addresses, and so on, so on. So it's a comprehensive system that allows you to manage entire your crypto operations. I mean, the crypto transactions and crypto flow, because trade tech, the trading platform, it's about trading, it's about liquidity, it's about orders and transactions. But you gotta have around your trade tech also the blockchain wallet management system. That's actually what we provide on top of that. Besides, as I already mentioned, it's a mobile application. It's a crucial, and so we have iOS and Android. And, nowadays, the mobile app, it's crucial component for any business. Then on top of that, since you mentioned, Avi, you brought up the legal framework, we can help to the clients to establish the entity and to obtain the license, but this is not our core business. We work with several companies and we prefer to recommend to our clients the reliable counterparties who will be able to help them to obtain the license, to establish the entity, to set up the office, to write all the policies and so on, to activate the license. Even though for us, we have 8 licenses across the world. And recently we were approved by VARA in Dubai. We received the preliminary in principle approval. And right now we are working towards to meet all the requirements in order to become or to get the operational license. But even though we have pretty large the legal department, still we also hire the professional agency because it's not our core business, right? And in terms of PSPs, we are integrated. The B2Core is integrated with 100 plus PSPs. Plus, we integrated with several cashier systems, and they are integrated with 650. So basically, our B2Core is integrated with 800 payment systems and AMIs. Basically, when you launch your own exchange with us, we give you the list of all those PSPs. You need to go there to pass KYC, to open accounts there, and then to provide us credentials, and we connect within an hour, your exchange with designated PSP, where you manage to get your account approved. So that's why we can help you because, we can help you to navigate into this field because we are experienced. We have all the reliable counterparties and we know where you should go in order to run your successful operations.
Got it. So I think we learned a lot today about how to start a brokerage or a crypto exchange. My last question would be about your new platform, right? The BBP. Can you explain what makes it different than the competition?
Well, in a nutshell, let's think of it as we said earlier in this discussion. We've all known exchanges. And an exchange, as I said earlier, is basically it's a matching engine that is matching orders. The brokerage model means that the order will be executed. This is a completely new approach. It's basically an execution of a transaction immediately before it's called what we call it pre-execution. So an order will be filled in the marketplace and then will be confirmed to the end user. This is a unique proposition. No other company has done this. We've been listening to our clients' needs historically, and this is why we built this system. It's a way to obviously to manage your operation a lot more efficient if you have a risk management team behind it. So it gives you a lot of flexibility in managing client flow.
And of course, it's fully customizable. You can find there a lot of settings. The best way to approach this is to leave the request on our website, beachbroker.com, and our sales associates will be glad to make a proper presentation and to provide them credentials, and everyone will get a chance to evaluate the platform.
For sure. So that link will be in the description of the podcast. I want to thank you so much, guys, for taking the time and coming on the podcast today.
Thank you very much, Avi, and thank you everyone for listening to our podcast. Thank you.
Thank you, everyone.